Alibaba stock surged on 70% year to year, and you want to know should you buy, sell, or hold the stock after this tremendous rally which the Alibaba Group holding stock has made. I'll tell you exactly why and give you exact recommendation for the stock, guys. So listen. First, we're gonna deep dive down into the business. Then we're gonna take a look at the fundamentals, how it's evaluated, and then we're gonna take an outlook and also chart analysis. So stay tuned and we're going to start with the business of Alibaba. As you know, manufacturing company, the leading B2B e-commerce platform for global trade. As you know, a lot of brands are outsourcing the production to China because it's actually more cheaper. And in terms of robots, it also it's really cheap and comes with a lot of things they're producing. As you know, almost everything here mostly most things are more or less cheap. So really a company where a lot of companies are buying and just to sell higher in another country like the US. And we have different suppliers, and we also now have this whole AI thing which Alibaba is doing. So especially big in the China market. As you know, this stock surged on 70% because the earnings get better. They have done a better, really better earnings, as you can see here. They, have back their growth rates, so that's why most investors are positive and optimistic for the stock. And also, when you take a look at the valuation, it's really, really interesting. Where do you see this in the US? You never see this in the US. We have the concern why the stock is so low valued on 17 is because we have different fears of the um, geopolitical storm. That's why also the stock fell recently on 4% or last Friday, because we all have these sort of geopolitical storms. Because of the allegations, and there's always trouble with Xi Jinping and Trump. So it's definitely hard. And when you bet on this China United States economic war, then you better get out of Alibaba, because a lot of companies are buying things in Alibaba just to sell high in the US. So also the US big market for Alibaba. But when you take a look, price earning ratio next year is higher, like 17 is really cheap, but because of the growth rate of minus 21% was actually really, really bad for the company. But we have next year 36, maybe in terms of the AI thing that they're doing. This cooperation also with Apple. It's really interesting to see what they're doing with the AI stuff, and they have a lot of data. So that sounds really interesting, and despite the fact that the year 2028 they have a growth rate of 20, that's really interesting. And as you can see, they are also a bit cash, a bit debt, but everything's fine. Price sales is 2, which is really, really almost nothing. But and you take a look at the profitability, it's actually not that bad. But US companies are actually better. So it depends on the growth, and it's really hard to predict because the market is actually struggling with the tariffs. And it's difficult to see because there are key elements, for example, the rare earth thing, which are really, really tough to handle for both big nations. So and this can affect Alibaba, and also the Chinese government can also, just get into the business and say, okay, we must replace the CEO. So that's also a risk. Generally, I think we have a lot of pessimistic feeling on the stock because this is really cheap. You don't see this like. We have the risk, and if you believe in the risk, if you have information about the risk of the economic war, or an actual war from the US and the China, and then you better not bet. But if you bet that everything works out and they may continue to making deals, then Alibaba has definitely potential. Um, as you can see here, how much percent we already grow, it's still cheap. it's still cheap. Like, we went from, I don't remember, we were on $60, and now we're up like, bro, like 130%. When you go back, I think camera right here. Um, we had, oh man, like, I said, I'm sorry. Like, so yeah, no, here was perfect buying opportunity. Here's still a good buying opportunity because then we had the exaggeration. What this trend was too impulsive, like what? But if we have like something like this continuing, it sounds really familiar. We went down and then we're up and then sideways and then we all go up. And I think also we do something similar like here. I don't think that everything is gonna, be okay with the whole economic thing. So maybe we can go up because we have a really, really big gap. We can fall on, this range of $125. I think that's possible because of this impulsive bull run. But I think it's cheap. So this is on my watch list when it felt, kind of this under 140. It gets really interesting to me, really, really interesting. But right now, maybe not. As you can see here, we also, this upside trend is pretty massive. We almost have every day a low loose day, like only red candles. So yeah, it depends on the business side. How's the next quarter? And we also have the quarter earnings. So yeah, I'm interesting. I will take a look at the earnings, take a look at the stock price earning ratio. And when it comes to something ridiculous, like back in the time, like when we had $60, something ridiculous like 12 or some, like, then I will consider to say buy, because even if the war starts, like, they still making money in China, and also a war ends sometimes. So yeah, that's definitely on watch list. Maybe not today, and it's a bet on China US, right? It's a bet, right? And that's your opinion. I think it gets interesting for me for 140. Then I can go for the risk and have this upside potential. Otherwise, I don't like this, risk to upside potential. But yeah, write me your opinion in the comment section. Leave a like and subscribe, please, my channel. And we see you guys in the next stock analysis.